Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions featuring proprietary bull-bear point and figure market breadth summary chart for August 25th, 2019. Market breadth. With this past week's market decline, our bull-bear point and figure ratio at 0.57 rose slightly from 0.53 last week. The total count of securities in bullish or bearish patterns increased 3% to 3,126. The count of bearish stocks decreased fractionally, while the count of stocks in bullish patterns increased 8%. The Pirls PNF market breadth summary chart shows us a market now 4 weeks in bearish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by emailing S2P market signal at protonmail.com for payment and access instructions, or by visiting Patreon. To receive the weekly Pirls Stock Market Commentary via email free of charge, simply enter your email address in the space provided and click Follow. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 28 points for the 6th advance in 11 weeks. At a negative 325.82 points, it continues below all 8 tops above plus 100, continues below the February 2018 bottom, has risen back above the July 2017 and May 2019 bottoms, and continues above the remaining 2 bottoms below minus 100 in the last 30 months. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 1 accumulation day and 3 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode on lower average daily volume. Momentum. The CCI 20 daily, continuing in a Woody's downtrend, is now at negative 75.22, down from negative 60.01 last week. At Wednesday 8:14 close, it formed a zero-line reject short entry signal within the plus or minus 50 range required. At Monday 8:19 close, it rose above the ZLR pivot, so we exit the trade simulation with a loss of 199.16 points on the Nasdaq Composite, or $4.96 per share of QQQ. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 23 weeks ago, while the daily CCI 20 began a Woody's downtrend 2 weeks ago. The CCI 20 weekly in a Woody's uptrend at negative 45.20 fell from negative 25.33 last week. It continues within the plus or minus 50 range for a valid zero-line reject long entry signal if the CCI 20 rises next week. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Summary: gold and silver and some tech on the top. Oil services on the bottom. Bullish, oil services continues in the bottom 5. Computer hardware and S&P retail have entered the top 5. Disk drives continues in the top 5. Disk drives, semis, and computer hardware have left the bottom 5. KBW Bank and networkers have left the bottom 5. Bearish, REITs, semis, and CompTech have left the top 5. Gold and silver has re-entered the top 5. Focus this week from www.zerohedge.com. Trader rages how market is haplessly complicit in allowing itself to be manipulated. The following are some key points and charts. Dow futures rose 700 points from overnight lows shrugging off dismal German sentiment data in favor of some denied comments from Trump that talks continue with China. But since the market opened, doubts appear to have appeared. As Europe opened, someone suddenly decided to dump gold futures. And as former fund manager and FX trader Richard Breslow rages this morning, quote, "It's beyond extraordinary how financial markets remain willing to be so haplessly complicit in allowing themselves to be so easily manipulated." End quote. Via Bloomberg, with the realization that monetary policy is running out of room, while politicians still believe the prospect of ever lower interest rates masks all sins, the world is rediscovering geopolitics, and it doesn't like what it sees. Central banks feel obligated to keep trying to cover for the mistakes and small-mindedness of others. You will know things have changed when the bounces are perceived as the opportunities to fade rather than the opposite. It won't come from chasing prices lower on panicked downdrafts, but a willingness to sell when everything looks rosy. That's a reason markets aren't overly concerned with the prospect of unilateral intervention in the dollar. Countries and investors need them. And if things continue to get worse with the global economy, and emerging markets most particularly, cheapening the currency would just temporarily place it at more advantageous levels to buy. Like it or not, the dollar is the ultimate safe haven. Bond markets seem broken, yet it's near impossible to come up with a good reason to be a contrarian. That's a problem, but it is what it is. As bad as equities look, they still have good support below, which, at least, puts a number around the risks. Thank you for watching this week's Pirls Stock Market Commentary video featuring the proprietary bull-bear point and figure market breadth summary chart compiled by dlpirl, S2P market signal at protonmail.com. For Pirls Stock Market Commentary, I'm Cynthia Pearl, hoping that you have been enjoying a peaceful and pleasant weekend, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.